Well, we believe that over the next 12 to 18 months, the oil price will move in the direction of $55 to $60 based on the outlook that we will have an OPEC agreement by the end of November in some kind of measurement. We will have a slight uptick in global growth, and the US shale production will only grow slightly.
So what is your general development and assessment of the commodity markets?
Well, after the US elections, we have clearly seen that the equity markets have moved on the basis of higher growth expectations, and the bond markets have moved on the basis of higher inflation expectations. In that context, commodity markets have as well profited from an upside movement, and now for a further outlook, we need really to look closely at what will happen at the end of November with the OPEC meeting.
So oil prices have picked up recently. The price of Brent oil is close to the $50 per barrel mark. Is this slowly due to the production limiting by OPEC?
Well, the production limiting is not clear yet. Definitely the decision end of September has had a positive sentiment for the oil price. Now we'll need to see if an agreement really takes place. We are some kind of confident that will be an agreement because of different reasons, basically.
So is there a lasting upward trend now?
No, we don't believe that it will be a lasting upside movement for different reasons. One of it is that the demand is still weak, basically on historical perspectives. First is secondly, you have with a higher oil price movement, you have the US shale gas production basically coming up again. And the third dimension is that there is the risk that countries like Nigeria, Libya and Iran will push up their own production rather quickly. That's a downside risk for the oil price. So we see the oil price moving in a kind of trade range between 45 to 55 US dollars.
So at the beginning of the year, the scenario was that oil was at $10 per barrel. Could we see a slump in this dimension today?
We don't think that will be a breakout on the downside, because basically you have the OPEC that acts as a downside hedge, basically. That's one reason. The other reason is that, well, we have a weak growth, but we still have growth on the basis of the US fiscal stimulus program. You have countries like Brazil and Russia coming out of the recession. That adds up to the positive sentiment also for commodities and the oil price.
And finally, what is Swisscanto Invest's 12-month forecast?
Well, we believe that over the next 12 to 18 months, the oil price will move in the direction of $55 to $60 based on the outlook that we will have an OPEC agreement by the end of November in some kind of measurement. We will have a slight uptick in global growth, and the US shale production will only grow slightly.
Well, thank you so much for speaking with us today. It's been a pleasure.
Yeah, you're welcome. Thank you very much.